All right, good afternoon or good evening. Welcome to the end of the review for today. And today is Thursday, December 5th, right here, 2024. And it's the fourth trading day of this week. And tomorrow we will have a non-farm payrolls at 8:30. That is the only high impact news for this week. So far, we observed this week. By the way, we didn't do the end of day review for Friday, which is Wednesday. We will cover a little bit Wednesday also for today. By the way, if we look on the high time frame, right on the daily time frame, you can see that the liquidity, the Monday and the Wednesday, it built up, and then the Wednesday is rally, but today it kind of at first it thought like it is we thought it is like another rally day, but surprisingly it's a down close day. So we can see that you remember last week we see not last week, but last time we're talking about a Wednesday reversal. So basically the Monday and Tuesday is liquidity engineer, and then the remove is gonna happen on Wednesday, or the manipulation move happen on Wednesday, and then the Thursday gonna be a continuation or gonna be a reversal. So basically, for the weekly profile, we have Monday and Tuesday gonna be a accumulation day. You remember ICT say AC, right? A stand for accumulation, and then IMD, right? Accumulation and then distribution, and then AMC, right, is a accumulation manipulation. So the manipulation move gonna be happen on Wednesday, and then on Thursday it's gonna be continue or it's gonna be a reversal. So so far this week we see that we look on the chart right here. You see that it's the Monday, it's Tuesday, and then boom. Even though we see the test from above, but the Wednesday it rally, and then the Thursday it kind of reversed a little bit right there. So trace. Let's see if the Friday is gonna be a continuation. But right here we see the Wednesday reversal of the Monday and Wednesday. So yesterday we tried to trade the Wednesday reversal, and it fell. Going to the chart, you can see that it fell because the market tells us a different idea than we anticipate. So here the screenshot that we take at the beginning of yesterday on Wednesday. That's where we thought at 9:15, right? We did go short, right? You see the short setup right there. Breaks from above and reverse. We did short. Yeah, we thought, oh yeah, it great. Because it's rate both London the London high and the Friday PM, or Friday right there, because the PM is the high one. So time for it to retrace, and it didn't retrace much at all. And that can give us the idea that whenever you see that the Wednesday, you see that it's expansion to the upside in the Asia and then continue to London, then it's not going to be a Wednesday reversal. Because let's look at the Wednesday reversal so we can compare and contrast. All right, here's our playbook for Wednesday reversal, and this happened the last time we have is October 27, where we have a Wednesday reversal. So which is on right there 27. You see the accumulation, right? Accumulation on Monday and on Tuesday, and then boom, it reversed on Wednesday. So you can call we can either call Monday and Tuesday is accumulation, and then Wednesday is manipulation, and then Thursday is gonna be a distribution. Or we can call Monday is accumulation, and then Wednesday is the manipulation, and the Wednesday it will distribute, and then Thursday going to be continue or going to reverse. So that is the one of the model that ICT talking about, and it's called AMCX, right? No, AMDX right there. And one of the guy, he really try this model. So A is stand for accumulation right there. Accumulation. And then you have M is stand for manipulation. And then you have D is for distribution. Yes, so X is going to be a continue or it's going to be reversal. So either going to be reversal, we don't know, that's what we call X right there. Reversal, or it's going to be a continuation. We can see this model all throughout the week profile right there. So it's like pick this one, this all also on Wednesday, you see that? So we have Monday is accumulation day, and then we have Tuesday it manipulates, and then Wednesday it distribute, and then Thursday it continue right there. But on this week we see on this week the week of 48 right here, we have a same scenario, but the Thursday a little bit different. It's the reverse, not continuation. So you have a Monday accumulation, and then you have manipulation happen on Wednesday. It gives us on Tuesday, and on Wednesday you have distribution, and then on Thursday is reverse. So we have 2 weeks that the profile right here, the move on the X is different. One is continuation on this week, but on this week it's a reversal. Okay, so let's see how it's play out for this week. So yesterday we do a lot of sorting, to be honest, because we anticipate a Wednesday reversal. We just learn this model, so we're very eager going and show them, because if it have to be this model. That's our mentality right there. But we learned our lesson. You have to, even though that is one of the challenge for the novice trader like us, right? When we learn about new model, we're so excited. So we look, every trade or every candle brings is a opportunity for our setup, but we have to step back a little bit to see, all right, if the market tell us it's gonna be a Wednesday reversal or it's gonna be a Wednesday that, continuation, in this case, continuation with the uptrend by Monday and Tuesday. So the market teach us yesterday that no, we're not gonna reverse on Wednesday, yes, but we did on Thursday, which is today. The Wednesday continued to rally up. Look like no one going and sell right there. So that's the idea right there. So the distribution from the Wednesday is distributing up, not down. All right, so how do we know that with the one that we already know that the Wednesday reversal? We'll look at the charts right here. The last time we have a Wednesday reversal is November 27. So you see that the Asia, the overnight market, did take out the Tuesday, which is a prior day high right there, and from there it's just reversal, right? It make a huge leg down, it retrace a little bit, and then on London it make a second leg down, and right here it make it look like all right. So it's it's not gonna break this level, the support level, right? 62.25 because it tests twice. That's what we thought when we opened up our charts on the Wednesday, November 27, and we tried to go long, but actually this is just a liquidity engineer right here. It's just a retracement, and it's gonna make a necklace down right there. So that's how the Wednesday reversal. Basically, the Asia rate the prior day high, and then reversal, and the London do the same, right? Reverse, but the London have to be, yeah, we can say that had to be, and later on if we see a different condition we can modify, but for now that assumption that the London have to be between the prior PM range, and then right before 9:30 we're gonna see a retracement, right? This liquidity engineer move right here to trap all the people who want to go long. Basically it build up the sell side liquidity so it can flush down. Yes, exactly. That means that the 9:30 open had to be in the mid range of the London range right there, and it failed to break the 18 open low right there. So that give a signal that it's gonna be a next leg down. So that is the Wednesday reversal profile we see. Do we see any other? Yeah, here's another Wednesday reversal profile. We try to build profiles so we can have a little bit idea. Okay, so this another Wednesday reversal happened on October 30. So on this, you see the same. The first move is the overnight in Asia. It take out the prior day high right there, and then it's reversal. In this case, a little bit different that London is not what? The London is kind of a retracement, but here the London is a neck down retracement right there. And then at the 9:30 or 8:30, it's already near the low of the PM right there, and boom, the 9:30 swing real hard to the downside and reverse back right away. So on the Wednesday, October 30, it's a very easy trade. You can short, you can long, and you can short, you can long, right there. but I know that the 27 is much easier trade, but this October 30 it kind of hard trade, right? Because it swing a lot, but it create a lot of move right now. As long as we are, we are fluencies in the liquidity run, then we know exactly what is the point of interest or what is our point of entry and exit right there. Yeah, so if you see that the 930 is swing too low, too far from the open, then you know that it's gonna be retraced back there, and then boom, the next gonna be the next leg down is huge right there. Okay, so that is the Wednesday reversal. But yesterday it created a new profile for us, which is a Wednesday continuation right here. So yesterday it gave us a new profile, or the opposite profile is the Wednesday continuation. So you can see that continuation is manifest in the Asia and also in the London. Then in the pre-market New York, it continued to rally. And around 9:15, you see the retracement right there. Let's see what the end of the day for that, for Friday, which is for yesterday, is Wednesday. Yeah, so here's our end of day for yesterday. You see that the 9:15, it come down. You see the short setup right here, breaks, test from above and reverse. That is a typical type 1 reversal. Yeah, here's our bread and butter setup. Type 1 reversal on the left and type 2 is on the right. Basically, a short setup is on the top and the long setup in the bottom right there. So basically it has break and test from above and reverse. That's what we saw right here on 9:15 right there. See that? But you have to take a quick profit. You're right there. Because we have to understand that this is a Wednesday continuation. It's not a Wednesday reversal, because the market already tell us what happened on overnight markets in Asia and in London, that it will not be a reversal. All of the move down here is just a retracement. Expansion, retracement, expansion, retracement, and then boom, it's gonna be expansion. So there will be no retracement turn into reversal, right? That will be on a reversal day. It's not on a continual day. Like, look on the reversal day. That's where you can see. That is, where's our reversal? Is it? Okay, so reversal right here. So on the reversal, you will see that it's expansion and then it retrace and then it reverse. You see that? And so it's expansion outside and then retracement and then reverse. Same right here, expansion and retracement, expansion and reverse. Yeah, but for the Wednesday continuation, you only have retracement. You don't have reverse. That is one of the key characteristics or the indicator that tell us that it's not going to come down. So don't short them. If short them, then get a quick out of there. But the better a safer strategy is just go long. Especially when we see that the open at 9:30, a very after the big move, you see the doji after 9:30. You can see that it's very interesting. You see that it break that 9:30, or you can say 8:30 right there. Trade with 8:30 or 9:30 should be okay, but it's set that error right there. So it's break down this error one time and it go back right away, and it tried to break one more, it fell, then boom. By the way, right here is 1:30, and yesterday 1:30, Jerome Powell, the Fed chair, makes some statement right there, and instead of we short right here, and we thought it's gonna be break it, right? Because we see the test from below right there. We thought it's gonna break huge sell with area, but somehow it's reversed, and you see the very solid, I mean, very strong bullet right there, test from below. You see that, and boom. I think we did go long right there also. So that's the idea of Wednesday trend continuation, or continuation for short, and the Wednesday reversal. So right after a Wednesday continues, then watch for Thursday, which is today, a reversal. Okay, so here's what we see for today. So we see that the whole overnight market is just consolidation right there. You see that expansion and this retracement, and right here you just have consolidation. So we thought, all right, so this is gonna be what, expansion, retracement, and then consolidation, and then right here gonna be expansion, or it's gonna be expansion to the outside. But we remember that the ICT price delivery model say that from the consolidation, it's not gonna be reversed. It's not gonna be retracement. It's gonna be expansion. But the question is gonna be expansion to the outside, to the upside. So right here we thought it's gonna be went down, so we did short for today right here. For the last 2 days, we take bang on, short, because we buy, we say, oh, it cannot be keep going up like that. But that is one of the buyers that can get up into trouble, because we don't know, right? You don't know how crazy the market can continue up, so don't just try to short them because you think that it's gonna be go down. You have to be patient, wait for the market tell you, and that is one of the mindset that we need to develop, that we cannot just short the market because we think eternalized or internal in ourselves, oh, it needs to go down. No, we have to stay away from that. We have to be so-called neutral, watch the markets, observe the markets, let the market tell what to do, not that we try to force our belief on the market. So right here we try to short, but you're going to see that it just flipped. So we learn our lesson. All right, when you see this consolidation less, and it's very close to the buy side liquidity, which is the high of Friday, then if you want to short, wait until it rated liquidity. That's the best. Don't short right here. That's the huge lesson right there. And it turned out that is a right approach right there. And right, you want to lose, just start with every trade is the last trade. Start with that mentality. So where you want to lose, You want to loss up here because that gives you the better risk reward ratio. You don't want to loss right here. So just start with that mindset that we better for us, that to start that every trade is a lot trade. So you have to choose where to lose them, where to lose your money, because that will give to where it give you a better risk reward. Then it will take care of itself. We don't have to worry about the outcome. So when we go to the 930, the 27 right there, let's see, 28, 29, $4-minute. Okay, so right there we thought, oh right, so it's good for it to short right there. But we have to wait for setup. We don't have any setup, and we don't have any liquidity trigger at all, which is liquidity rate or run. So that's the mistake. That's the lesson we need to learn. You either wait for the setup, better, both conditions met, the setup and the trigger, or the catalyst, right? You need to wait for the catalyst or the trigger, which is the liquidity run. Liquidity rate, something trigger them. Otherwise, don't engage. Yeah, we thought, oh wow, it's gonna be short right there, but it's a mistake. It flipped right there. You see that? Go to 40, 45. You see, that's the candle. So whenever you see that candle at 9:30, then please wait. Maybe wait for 1 or 2 hours, because that means the market, it doesn't have enough liquidity, either buy side or sell side. So it have to build liquidity, to engine liquidity. In other words, market tells us to wait, then we have to wait. Yeah, at first it may look attractive right here. You see that? Say, all right, it break, touch from above, and then reverse, then short them. But the minute we go in and short them, it flip right away. You're gonna, yeah, you see, it flip right away. And right here, it break this, it take out this high, which is a buy side liquidity. Well, if you want to short, then the best is short right here. That is the mindset of, the best loser win right there. Yeah, we have to have that mindset right there. Who thought that it's gonna be reversed from here? Well, if you read the liquidity right here, you know that the whole idea right here, that the London and Asia, they hold all right here, and then boom, the rate like liquidity, the buy side, then boom, the short gonna come in. See that? Who thought that it's gonna be short from here? Because huge giant candle, right? But what's for loss? The magic happened. See that? The minutes, yes. The minute rate of liquidity is retreat right away. That tell you that get ready to short. We need short right here. Yep. Yeah, we need short right there. Okay, so it look good right here. It was short, right? But we aim for the target right here. We aim very ambitious target right there. Eventually hit these targets, but as you know that it take a while. It reversed back right here. Oh, right here, I want to tell you right here. We thought that, this setup, right, first leg down and this retrace test from above, it gonna make a second leg down. But it did not happen today. Yeah, here's we thought it gonna be neck leg down because we saw that on the other day. We saw that is on Wednesday, November 21. You see that when the reversal happened, but today is the opposite. Excuse us, it's not opposite. Today is Thursday, sorry. But you see that it's a huge move. But we make mistake that we have to look where the price come from. In this case, it's retracement, and then it's gonna be a next leg down. But look right here is yeah, but the first leg is not so strong, so it didn't play out the way we want. Because we stay in a trade because we thought it was going to be neck leg down, we didn't take our profits, but today it didn't work the way we want to see. Then the RA continued to go down. But today it's just retrace right there. You can see. Yeah, wait, you see that? The huge, look at that. The huge retracement right there. It makes us so nervous because we should have take our profits. But anyhow, it did make, you see that? I said, wow, who thought of that? So basically, we go short right here, we didn't take profit, we get stop out. And that's what happened. A little bit tricky. So whenever you see that right here, you better set up. You see that setup right here, break, test from above and reverse. That is a type 1 reversal right here for long right there. Break, test from below, reverse. We better get out and wait for the better opportunities. But we a little bit stubborn, right? We try to be right. That's the idea right there. But look right here, it gives us some idea. But don't short, yes, right? Wait right here. Look for the magic along it. As soon as it rate this high, the reversal happen. You see that? Wow, who thought it's gonna be a reverse from here? You see that's huge at 12:45. Yeah, that's where. You see that? So basically you have short setup right there. Break and reverse. Yes, look at that. By the way, we end right here, so that's why we don't get out from that. We short again. And we have to stick through this scary. You see, it looks so scary. We thought it's gonna be the same thing right here. But now we look back, you see this liquidity right here, this swing right there. So this swing right here, take the buy side and the sell side. That's another model right there. It's called both side liquidity rated, and then it make one more move, right? The sell side, the buy side, and boom, it's gonna flush out. Yeah, eventually it's gonna hit. You see, wow. Yes, so eventually it's gonna hit this target, our target right there. That's our liquidity run right there. Look what's the trade we took, the last trade we took for that. Yeah, this is the trade we took, a short trade there. We aim right there. So basically we go in around 220. And wait, where you see that, it come back. It looks scary. But we let it run back. Actually, we don't wait in. If we wait in front of our computer, we get nervous, we get out. So we didn't wait. We let it run. We go take a quick walk. And you see, eventually it hit. That's the magic right there. You have to be. Sometimes we just let it run. Don't babysit our trade. Because if we babysit our trade right here, it looks so nervous. right? At one point, the profit is huge. Let's watch the video before that. Okay, so right here, I think. Okay, so we go in and okay, all right. Yes, so we engage a short right there. See that? We engage a short. We go in short at 150. Yes, 150. Yeah, we're in for 115 and we stay until almost the end and hit our target. Before that, you see that with this short right here is right for the first leg, we short right here and we have a profit here right here. But you know what? We want to AM right here, but it didn't happen in the first time we try it. We should take the profit right here and try again second time. But you know what? Who know? I mean, if we know that the first move is the trial run, the second move is where it's gonna really rip the liquidity. Yeah, so right here we short right there, but we didn't take the profits. If we take the profits and try short again, then our profit could be double. But who knows? That's how we try and we learn. You see that we did have a profit, but we didn't take it, and it end up we hit our break even. We can move stop even right now. Yeah, and then hit out. You see that? So we take a yeah. So the signal for us to get out of trade as soon as you see this candle right here, right? Break step from below and reverse, then better get out. Wait for another. You see right here, the short setup, break step from below. Sorry, long setup, break step from below, reverse right there at 11:15 or 11 right there. That's a Taiwan reversal. All right, before we close out for today, I want to say something real quick about yesterday. We did saw a setup yesterday is a type 3 reversal. You remember we have a 2-time and we try to build a type 3 reversal. Basically, it's a double break. In this case, the level is 60.84. So basically have break, reverse, break, and reverse. That is the type 3 right there. Yeah, here's our write-up for the yesterday, Wednesday right there. Wednesday continuation right there. If we can reverse and you see it's break the level, but you see that it did not, it continued. So that's where you see the fall breakout at 64.84 right there. Oh, all right, we need to fix right there. It should be 84, not 64. 84. Let's fix that error real quick. All right, so we just quick fix the level real quick. So you have 4 steps right there, break, and then you have reverse, break, and reverse. So that is a very reliable reversal setup. The type 3 is not common like the one we see. Type 1 is the most common one, and then type 2, type 3 is it not quite happen all the time. But pay attention to the time when that happened. So this happened around in the PM, right? You want it PM 14. Let's look at the use case where that happened. Here's another instance where it happened. It happened on. Let's look at the time only. It's 11. Okay, so it can be happen anytime. Just depend on the liquidity. But you have a roughly idea. It's just the same. Break, reverse, break, and reverse. The better you want the break reverse happen close together, the better. Right? For yesterday, the break and reverse, the first one and the second one, it curve. You see that it curve, not close together. It have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 is about 2 hours apart. But for this one, it's very close. So the closest together, the better. So this is another instant where we can see that. Let's look for other instant. Yeah, this one also happened very close together. And oh yeah, this one happened late in the game. Right, so this is overnight. Let's see what else we see. Okay, so this one is happen around 12. So basically it can happen anytime. Let's look for that pattern. Right, break, reverse, break, and reverse. So that's type 3 right there. What else we have? Yeah, I think that's all example we have. All right, we run out of time. Thank you for your time and interest. Always grateful for this opportunity. We do what we love, then success is coming our way. Day by day, little by little, in every way, we're getting better and better. Have a great night, and see you tomorrow.